Hey, good morning, guys. I hope you guys had a good holiday. All right, so here is what I was thinking about talking about. Um, and this kind of came about from a customer request. So um, that's kind of what told me or led to me thinking I should probably cover this again here. So let me just build a simple stop loss here. So the trailing actions section here, um, this there's really this trailing actions is one of the main components that makes BlackBird so powerful, right? There's no other strategy out there that allows you to build your own trading rules, right? And so I thought I should probably cover this again and kind of go over the differences between maybe the initial delay and the trigger. All right. So the default, right, is going to be no movement, or basically no trailing roll, right? And the second one down is just a standard fixed trailing roll, right? So a fixed trailing roll is wherever your initial stop loss placement is, right? The stop loss just inches up using that fixed distance. So in this example here, if we take a look at the initial placement, right, our stop loss is a 10 tick stop loss, right? It starts off at a fixed 10 tick stop loss. So if we use the standard trailing, then the stop loss is going to be just a simple 10 tick trailing stop loss, right? It's going to be fixed at 10 ticks, at a 10 tick trailing. So it's going to trail price by 10 ticks, just a fixed, so in this example, it'd be a fixed 10 tick offset. So that, right, so if you don't need any fancy kind of trailing stuff, you just want your stop loss to have a fixed trailing distance, right? You can just use the standard trailing here. So now if you want to get in there and make your trailing functionality a little more complex, then you can use the custom here. So and then the next step down is evaluate using. So the evaluate comes into play when you have multiple trailing rolls, right? So let's say you have 4 trailing rolls, and 3 of the trailing rolls are all trying to move your stop loss, right, at the same time. Well, you have to come up with some kind of a system to decide, ahead of time, which of the trailing rolls, which of the 4 trailing rolls has the priority. Right. So if all 4 trailing rolls are trying to move your stop loss, to a different location, to basically a different price offset, right? So if you got 4 trailing rolls here, all fighting to move your stop loss, you have to decide, which one of these 4 has the priority here. And so that's what evaluate using does. So, all right, the default setting here is whatever action will move the stop loss closest to price, right? So one way that we can evaluate all 4 of the rules and set a priority is to look at which of these 4 rules is going to move the stop loss closest to price. In other words, which out of the 4 rules is going to tighten the stop loss the most? Which one will create a tighter stop loss, right? Typically, it's customary that you want your stop loss to get tighter and tighter and tighter with the more profit that's been captured, right? To try and keep as much profit as possible. So therefore, right, the default the default setting is action closest to price, and that will keep that stop loss as tight as possible. Or basically, it'll the rule, whichever one of these four rules will move the stop loss, closest to price, or make the tightest stop loss. That's the rule that will have priority and will get executed over the other three. So then the next setting down is furthest from price. So maybe you want to keep your stop loss further away, or you want basically you want a looser stop loss or a wider stop loss. So if that's what's important to you, keeping your stop loss at a widest distance, the furthest away from price as possible, right? Then that's another option there. So whichever one of these four trailing rules that would move the stop loss, or that would keep the stop loss furthest away from price, that would be the trailing rule out of the four that would then have priority and would be the one that gets executed. And then two other ways that we could look at this is, you could say, well, whichever trailing rule triggers first, right? So if if in this example, if we have four trailing rules, whichever trailing rule triggers first, that's the one that will always have priority. Okay. So, and then you would have the opposite. So if the last trailing rule out of these four that to trigger could have the priority. So now let me address kind of a follow-up question, which would be, all right, so we have four trailing rules here. Now the evaluate using, right, this only becomes necessary if you have, say, two or more trailing rules that are trying to trigger at the same time. All right. So as an example, let's say rule C has been triggered and wants to move the stop loss, but rule A, B, and D are not triggering. Well, then there's no conflict, right? If rule C is the only rule that wants to move your stop loss, and the other three are not trying to move, then there's no conflict. And so therefore rule C will move your stop loss, right? Because there's no conflict. Rule C is not fighting with one of the other rules to try and move your stop loss. So this evaluate using only comes into play, is only necessary. For example, if rule C and rule B, say you have two rules that are trying to move your stop loss at the same time, that's when you get a conflict, right? So there's a conflict between rule C and rule B, both trying to move your stop loss at the same time. And so therefore, if you have two or more trailing rules trying to move the stop loss at the same time, that is when the evaluate using comes into play, is necessary. So, right. So the evaluate using is just there to eliminate conflicts. It's there to make a decision, when there is a conflict, when you have multiple trailing rules trying to, move your stop loss at the same time there. So, okay. All right, so Jeff's got a follow-up question here for me. Okay, so Jeff is asking, so we're trying to get some clarification on the first action and last action options here. Yeah, so Jeff is asking, is the first action to trigger like an OR between all the rules. And would the last action to trigger, would that be like an and? Yes, I guess you could consider it like that, but it's not a logical. It's not a logical decision. So so I'd say no. The first action is not like an or. It's just, basically it just says whichever rule executes first, which doesn't have a logical, doesn't have a logical analysis to it. So it's just simply whichever one of the four rules, so if I have four rules, whichever one out of the four fires off first, well, then that one gets, so say, for example, rule D could be the first rule that fires off first. And basically, BlackBird just marks rule D as the first one that fires off. And so therefore it just has the priority. Right, it would have the priority if it's the first one to fire off. But remember, the priority is only necessary if like rule D conflicts with another rule. So say like rule B and D are trying to move your stop loss at the same time. Well, then rule D would have the priority. So then the other thing would be, let's say, so D fires off first, and then let's say B fires off second. All right, so then what happens if rule A and B try to fire off at the same time? All right, say, yeah. So rule B and rule A are trying to move your stop loss at the same time, right? Well, remember, rule D was the first one to fire off, and our evaluate says first action to trigger. Well, rule A and B were not the first action, so, how would that be handled? Well, since rule B would be the second one to fire off, then rule B would have the priority over rule A, right? So you just got to take a look at which rules, basically the priority gets set to which order the rules fire off at. So if rule C becomes the third one, then rule C would have priority over rule A, which would be the fourth one. All right. So if rule D fired first, rule B fired off second, and then rule C, all right, fired off third, rule A fourth, then basically this becomes the priority level, like that. All right, so basically rule A would always have the lowest priority, right? But if only rule A was trying to fire off, then rule A would execute, and it would move your stop loss because, right, if there was no conflict with the other rules. So as long as rule A was the only trailing rule that was trying to execute, then rule A would go ahead and execute, right? So it's only if one of the other rules is trying to execute at the same time that rule A is executing, then this priority would get set up, right? So, and of course the same would be true for last action. So last action is not a logical and. I mean, you could consider it as using a logical and, but not properly. You couldn't properly analyze this using a logical and, because rule D could fire off separately, then rule B and then rule C, and then rule A. They could all fire off independently of each other and without any conflicts. And so therefore rule A would still be the last one to fire off, and therefore there's no logical and involved with this. Let's see. Okay, yeah, so I guess, yeah, Jeff's kind of bringing up a good point here. So let me kind of clarify some terminology. So when I say evaluate, what I'm talking about is a trailing rule that's trying to execute. Jeff's kind of bringing up a good point here. So, let's say all these rules, all four of these rules here are set up to evaluate when the bar closes, right? And typically, well, I shouldn't say typical, but let's just say all these rules are set up to evaluate when the bar closes. So all four rules get evaluated at the same time. Yes, all four rules will be evaluated when the bar closes, but I guess really what I'm talking about is only some of these rules will actually try to execute, right? So all four rules may evaluate, but let's say only A and B try to execute. So rules C and D, those conditions may not be met yet, and so therefore they don't execute. Right, so this evaluate using, I guess another way you could consider that is execute. And in fact, actually, I think I put a backlog order to change the wording on this to say, execute using instead of evaluate using. So I think execute using would probably be a better word to use, because of course all your rules are always being evaluated, but the execution order, so the evaluate using is really determining which rule, one of the rules gets executed, right? So if you have, two rules trying to execute at the same time, and again, when I say execute, that means like trying to move your stop loss, then that's what they evaluate using. So all the rules are always being evaluated internally, and then when some of these rules are actually trying to execute, that's when the evaluate using comes into play. So let's see. So in the example here, so Jeff is saying if B and D are the ones trying to execute, so if only B and D are trying to execute, the evaluate using here is deciding which, is making the decision, is B or D, which one actually gets executed, because you can't execute two rules at the same time, right? You can only execute one. So so the evaluate using is making that decision. It's setting up the decision to pick, well, does rule D get executed or does rule B get executed? So, and so if we have last action set, then rule B would be the one to execute, since rule B executed second, so it was the last one to execute in reference to rule D and B, right? So since rule D was the first one to execute, rule B would be the second one to execute. So therefore, rule B is the last one to execute out of these two. Yeah. All right. So you could, another way of saying the evaluate using, this option is kind of like a tiebreaker. Exactly. So, you could say that this evaluate using um, yeah, it kind of becomes a tiebreaker rule setting. So okay, so I think we got the evaluate using covered pretty good here. All right, the name, the name column here, whatever you can put whatever name you want here. Right, so it's kind of handy to put a name on there. That way, when you go back to these rules, the name can kind of clue you in as to what that rule is actually doing here. So so for now, I'll just leave it as Rule A, and I might come back and rename it later. So the second column here. Well, okay, yeah. Before I get into this too far, so all of these columns they're designed to BlackBird evaluates these columns from left to right as if you're reading, right, in reading order. So you could think of think of these columns. I guess one analogy you could use is like an Excel spreadsheet, right? So it goes from the left column and executes down through to the right column, all the way down through, right? So the first column that gets evaluated is the initial delay, right? So the first thing before a trailing rule can execute is, well, the first thing that has to happen is the initial delay has to be met first, right? So if there is no initial delay, well, then that's been met because there's no delay. And so then the trigger on will start to get evaluated right away, right? And so then once the trigger on has been met, so let's say, for example, so let's just say we're looking for some kind of indicator value, all right? And so that indicator value has been found, and then the next step would be the action. And then the action is what actually moves your stop loss, right? So, the default here is that the stop loss gets moved to the last price, right? So, and then once the action is performed, then the next step is to check to see, how many times do we repeat this rule? Does this rule, keep getting repeated, or do we only repeat this rule once or twice or just a few times, right? So how many times do we repeat the action, right? So then the repeat is the last step to get evaluated. All right, so each of these columns gets evaluated in order, going from left to right. So, all right, so let's take a look at some of the initial delays here. Now, delays, the word delay implies a time-based kind of thing, right? Some kind of a counting mechanism. Usually that refers to time, some kind of a time delay, or you could have a counting delay, for example. So you notice the options in here are the ones at the bottom here are basically time delay, right? So seconds, minutes, and days, those are times. Bars, that would be a counting mechanism, all right? So if you wanted to wait 7 bars, say you wanted to wait 7 bars before you actually execute a trailing rule for some reason, right? That would just be a countdown. And the same with points and ticks; those are countdowns as well, right? So say you want to wait for 10 ticks in profit, right? So you could set a delay of 10 ticks in profit. So that would be a counting delay, right? You just kind of count down until you get to 10 ticks in profit. So, and then you could execute. And then you could, and then the rest of the trailing rule would then begin to execute. Okay. And also you could do ticks against direction. So let's say, once you've gotten 10 ticks in loss, a 10 tick loss, you could then set up a rule that, tightens up your stop loss. Just as an example. So, probably a more effective use of the, of this ticks against direction would be to lower your profit target. So let's say, so if price moves against you 10 ticks, then maybe you might want to bring your profit target down a little closer to price, so that hopefully you can get your profit target hit, instead of a stop loss hit. That would probably, I guess that's a more practical example I can think of for using a 10 tick loss in your initial delay. Would be to move your profit target a little closer to price. So, all right. So I'll just leave this as a 10 tick profit. So we'll set this delay to 10 tick profit. Right. So once we get a 10 tick profit achieved, then the next step is the trigger on gets evaluated. And again, you don't have to have a trigger on. You could leave this to none. So if there is no trigger event, then once the delay has been met, then the action starts executing immediately. Right? This action will start executing immediately. So, right. So when it comes to using the delay and the trigger, you can use both. You could use one or the other, or maybe you could use none. Right? Your initial delay and your trigger, they could both be set to none, which means this trailing rule just starts executing instantaneously. Right? So now we just kind of set up an example here. Right? So this kind of a trailing rule basically becomes a fixed 10 tick trailing rule. Right? So there's no delay, so we're not waiting for anything. There's no trigger, so we don't need any kind of special event to happen. Right? We don't need any of that. We're not waiting for any of that. So basically so then BlackBird just moves on, and it'll just start moving your stop loss right away. Right? And then the next step would be, the repeat. So how many times do we repeat this? Do we only move that stop loss once? Or do we want this stop loss to repeat indefinitely? So, so if I did something like this, so if we set repeat to indefinitely, and we want to repeat on every tick in profit, then, right, so this rule here, so there's no delay, no trigger. Our action is to move to the last price minus 10 ticks. So that would be the same as doing this standard trailing fixed offset. right? The standard trailing, a fixed distance offset. Since our stop loss is set, our initial stop loss is set to 10 ticks, right? Our initial stop loss is set to 10 ticks. And since I set the action to a negative 10 ticks from the last price, right, that creates a fixed trailing stop loss of 10 ticks, which would be the same thing as using this standard trailing here. Yeah. All right. So let me kind of go back into the triggers here a little bit. So, yeah. So again, you don't have to use a delay. You don't have to use a trigger. You could use both, or you could use one or the other. It all depends on on how you want your stop loss. Whatever your stop loss rules are, that determines whether you use a delay or whether you use a triggering event here. So let's take a look at all the triggering events here. Right, so one triggering event could be a bloodhound signal. Right, you could actually build signals in Bloodhound that determine when to move your stop losses, right? Or it could determine when to move your profit target as well, right? You could set up a Bloodhound signal that will move your profit targets around as well, right? A Bloodhound signal doesn't have to be a trade signal, right? A Bloodhound signal could be used as just simply, this condition has happened. So you could set up Bloodhound to just identify conditions, and then those conditions can be used inside of BlackBird to, to trigger trailing rules. So you could set up conditions in Bloodhound, right? You could set up a signal in Bloodhound that will move your stop loss, or it could move your profit target, or it could even move your entry order. As long as your entry order hasn't been picked up, you could move your entry order based on a Bloodhound signal as well. Okay, let's see. So another trigger could be, let's say you're waiting for a indicator value. Let's say you're waiting for the ATR to get to some certain level. So like if the ATR gets really high, that could be used as a trigger. And maybe you might want to. So if the ATR gets really high, which means you're in a really strong trend, then maybe you have the fear that trend's going to come to an end, and so therefore you might use the ATR to really tighten up your stop loss a lot. Right. So let's let me throw the ATR on here. And okay. All right, so here we go, ATR, and yes, the ATRs don't work very well on range bars, so let's change this to a minute. And oh shoot, that's right, I'm on sim data here. Darn it. All right, yeah, just a moment here. I need to get some minute data loaded. Okay, there we go. Let's get BlackBird going again. And all right, get back into the. Okay, so we've got an ATR here, and right. So let's say You know, if we're looking for an ATR that says 0.11, right, that could be a triggering event. If your ATR gets up to 0.11, at least on oil, if it gets up to 0.11, right, that could be a triggering event, you know, to do something. So let's get back into this trailing roll here. All right, so with an ATR, you know, so let's say if the ATR gets greater than or equal to 0.11, right? So that could be our triggering event. Looking for that ATR to, you know, kind of shoot up there after a strong trend, and you know, maybe you tighten your stop loss. You know, just set that to a 5-tick stop loss or something like that, right? So there you go. So there's the indicator value, trigger, you know, triggering event. Let's see, yeah, the trade signal, and let's see. Oh yeah, the trade signal. So that would be one of these guys up here. So remember the signals, the trade signals are up here. So you could use a bloodhound trade signal, or you could use a indicator based. So let's say you're using some, you know, some third-party indicator trade signals as well. Right. So if you're using these, you know, automated trade signals, then this trigger for trade signal, this trade signal trigger. So basically, if one of these, if a trade signal fires off up here, you know, however you have this set up, if a trade signal fires off, then that could be a triggering event as well. Let's see. Trying to think of an example here I can give you as a trade signal. Let's see. I'm going to see if I can set up a bloodhound, some bloodhound signals here as an example. Let's see. These signals aren't setting up to be a good example. All right. Well, shoot. Okay. Sorry, I don't really have a great example here, but we'll just kind of have to go with this. Okay, back to where we were. So we were using okay, so we're talking about the trade signal trigger here, right? So what we're, you know, so the bloodhound signals that are on here, those are the trade signals. So, right, so let's say right here where my cursor is. Actually, let's take a look at the short here. Let's take a look at the short at 9 o'clock, 9 a.m. So we get it, right? We get a trade trigger there, right? And then say when the next short trade trigger comes in, right? So this next short one here at about 9:03, yeah, it'd be 9:03 a.m. right there where my cursor is, right? So on this next trade signal, that could be that could be used as a trigger event as well. That could be used as a trigger, right? So the first, let's just say that the short signal at 9 a.m., let's say that actually executes the trade, right? That gets you into the trade. And so then any further trade signals, so this short trade signal here, the next one at 9:05, that short signal at 9:05, the one at 9:03, right? So these next two trade signals, those could be used as a trigger event, right? So I don't know, maybe you use those. You might use those these short trade signals here. You might use those to I don't know, again, tighten up your stop loss. Yeah, I guess whatever you can kind of come up with, as a way of using these additional trade signals, right? So the one at 9 a.m. gets you into the trade, and then the short trade signals afterwards, those could be used as trigger events in your trailing rules, right? So, all right. So let's see, what would be the next one here? Okay, next one is we could compare. You can compare price to an indicator. Really, this kind of comes into play with a moving average, right? Right. Moving averages are the ones that compare to price. So, right. So we've got a SMA 14. We'll just use the SMA 14 as a default there. Right. So let's just say if we're in a long trade, then if let's say price goes below. So let's kind of set these up as opposite here. So let's say actually, there we go. Let's do this. So let's say you're in a long trade, but then price goes below the SMA 14. That could be a trigger event as well. All right, so let me get the SMA on here. SMA 14, perfect. Right, so let's say we get into a short trade here, and then eventually, let's say price breaks above or crosses above, price goes above our SMA 14 here. Then that could be, you could use that as your trigger event for something like that. All right. So a possible example here might be, look, if price, let's see here. Yeah, so if we're in a short trade and price goes above your moving average, right, that could be an indication that, price is going against you, that maybe the trend is failing, and so therefore maybe you might want to tighten your stop loss up or something like that. Right? Or maybe you might want to move your profit target a little closer to where price is if it looks like price is going against you, right? You might want to tighten your stop loss up, and you might want to bring your profit target in as well to try and capture that profit if the trend is really kind of changing directions on you. So, so that's, I guess, one simple example of how you could use price versus indicator, right? Compare price to your moving average. I guess, yeah, there's lots of other indicators that work on price as well, but, the price versus indicator, you need to make sure that the indicator runs on the price panel. So for example, if I tried to use, for example, the MACD, right? Now I could plug the MACD in here, but the MACD, right, the value of the MACD doesn't correlate to price. So therefore, it wouldn't work out. The MACD just wouldn't work in this situation because you really can't compare price to the MACD. Right? They're on two different scales, right? The MACD is on its own scale versus price, so that wouldn't work out. So you need to make sure that you're using an indicator that runs on the price panel. So something like the EMA runs on the price panel there. So, all right, let me step on to the next one here. Right, so profit or loss. So you could look for a specific profit or loss as your triggering event. The profit or loss in the trigger is very similar to using the initial delay. Right? You'll notice that the initial delay, you can look for a profit in ticks, or you can look for a loss in ticks. Right? You could look for a profit in points, or you could look for a loss in points. Right? So there are some similarities between the initial delay and the trigger event here. However, the trigger has a little more capabilities. The trigger, you can put in a dollar amount here. So we could look for a $100 loss, because you'll notice that my currency is set, or my unit is set to currency. Right? So this would be $100 in loss. $100 in profit. $100 in profit. So I could set this to a loss. So if you're looking for a $100 loss, right, as your trigger to trigger some kind of trailing roll, you could do that. And so the units, so the profit and loss here has more functionality because it has these units here. So right, you could look for ticks, so let's say you're looking for 10 ticks in profit. You could do something like that. You could even look for an ATR as well. Let's say we could look for 0.1 ATR in profit. Right. So looking at our chart here, I can see for oil, the ATR, it's kind of ranging somewhere around the 0.1 area, right? We got from 0.06 up to like 0.12. So I could just look for a 0.1 units in profit in the ATR there. And then of course you need to set up your ATR period. So if I'm using a 12 period on my chart, then I'd want to set my ATR to 12 period as well. I could do something like that. Here, let me shrink this chart up a little bit. There. let's see. Yeah, so there's all the units that you can look for profit and loss. Right, and let's see. The last one here is order. The order status has changed. So order status, right? So for this trigger, that means you have to have orders on the board, right? So you have to have a working order in order for this order status, to actually do anything. So let's see. The first thing, let's see. Right now, all I have is just the market entry order for now, right? So if you notice, I've only got I only have a entry order set up and a stop loss set up. So if I look under my select orders, I can see that I only have just the market order to pick from. So let me kind of go in here and do something. So let's set up a order set A and order set B, right? So I've got two different order sets. And so if I go to my trigger on, and now you can see I have a lot more orders to pick from. So I could, say I could look at let's say the profit target for B, right? So let's say, right, this profit target here for order B. So let's say the profit target here for order B gets hit. Then I could use that as a trigger for my stop loss. So probably something a little more practical would be this. Let's say my profit target for A gets hit. So if my profit target for A gets hit, then I could use that as a trigger to tighten up my stop loss for order B, right? So order B's stop loss could tighten up when order A's profit target gets hit, right? And of course, to make this a little more practical, let's do this here. There we go. Right. So for B, my profit target is 25 ticks, but once this 10 tick profit target gets hit, then I could use that to, tighten up my stop loss, or, whatever I want to do there. So, all right. So again, we have all of these orders to monitor, to look at. And so if we're looking at the profit target for order A, right, order A's profit target, then we could say, do we want the trigger to happen if just any of the contracts gets filled? So for example, let's say you're trading 10 contracts on A. On A, you're trading 10 contracts. So if just one of those contracts gets filled on the profit target, right, you could say any gets filled. Well, that could trigger your event. Or maybe you want to wait for all 10 orders to get filled on the profit target, and then you could move your stop loss after all 10 orders get filled, right? So, yeah. Or here's another thing. Let's say the stop loss for A, right? So for order A, let's say our stop loss here. Let's say the stop loss gets canceled for some reason. Yeah, well, I'm trying to think of a better example here, but well, yeah, I guess we'll just go with this for now. Let's say that, yeah, your stop loss, for some reason, your stop loss for order A gets canceled, then you could use that as your triggering event. I don't know. So if your stop loss for A gets canceled, then maybe you need to tighten your stop loss for order B or something like that. Right? Something a little more practical might be, let's say order B is a limit order, right? B is a limit order, and so if, let's see, where is it? There we go. So if order B is using a limit entry order, so let's say your limit order, say it never gets picked up, and so therefore, right, you might cancel that limit entry order after a certain period of time, right? If your limit order doesn't get picked up, it's a good idea to kind of cancel these limit orders after a couple of bars, right? So let's say we cancel after 5 bars, right? So we have a limit order, and we're going to cancel it after 5 bars if it never gets picked up, right? So then going back to our trigger here, if our limit order, if the limit entry order, if it ever gets canceled, so I just set it up so after 5 bars, this limit entry order is going to get canceled after 5 bars. So if that limit entry gets canceled, right, that could be your triggering event. To do something, maybe you tighten your stop loss because the limit order never got picked up for some reason. Or maybe something a little more practical is maybe you move your profit target further away. Maybe you make your profit target a larger profit target if your limit order never gets picked up. Maybe that's a little more practical example of looking at a entry order getting canceled. So, all right, I think that kind of covers it. So I'm going to take a look at the question board, see if there are any questions on any of these trigger events here. All right, so Jeff is asking. Jeff has a question about, are these trailing rules, are they evaluating on a tick by tick or when the bar closes? Okay, yeah. So let's go back to this indicator price versus indicator example here. All right, yeah. So we'll use the SMA 14 there, and all right. So let's say if we're in a long trade and price goes below our SMA, or if we're in a short trade, if price goes above our SMA. So so the question is, are these rules being evaluated on a tick by tick basis or when the bar closes? So that depends. It's actually both. So when you're using an indicator, so if you're setting up a trailing rule and if a indicator is involved, then it's going to be when the bar closes. Well, actually it's going to depend on how you have BlackBird set up, right? So really, it all depends on your calculate on bar close. So this calculate on bar close, right? This NinjaTrader setting, that really determines whether you're evaluating on a tick by tick or on a bar close. All right. So if you're using indicators in BlackBird, so any kind of condition, any kind of setting that involves an indicator, well, that indicator gets evaluated based on this calculate on bar close, right? So with calculate on bar close set to true, then that means you have to wait for the bar to close before that indicator gets evaluated. All right. So remember, so I'm running BlackBird set to true. So that means we have to wait for the bar to close before indicators can get evaluated, right? So NinjaTrader will only evaluate an indicator when the bar closes, right? That's how this is set right now. So let's see, let's get back in here. So let's kind of run through some of this here. So in the initial delay, right, if you're looking at ticks in profit, those are actually tick by tick. Those are real time. So ticks in direction, ticks against direction, points, right, those are actually evaluated in real time, tick by tick. However, bars, of course, if you're counting bars, that can only get evaluated, once the bar closes. And time, so seconds, minutes, and days, those are time based, so those have to be evaluated in real time as well, right? Let's go to the trigger events here. So so if we're using a bloodhound signal, well, remember, bloodhound is a indicator. So with BlackBird set to calculate on bar close equals true, well, bloodhound is an indicator, so therefore you will have to wait for the bar to close to get a bloodhound signal, right? So a bloodhound signal gets evaluated based on your calculate on bar close setting. And yeah, of course, indicator value, well, again, indicators only get evaluated depending on your calculate on bar close setting. So the way I have BlackBird set up, you'd have to wait for the bar to close before the indicator value gets evaluated. Trade signal, again, trade signals, those are indicator based. So again, those are going to wait for the bar to close when calculate on bar close equals true. Price versus indicator, again, we're dealing with an indicator. Profit or loss. Profit or loss, there's no indicator involved here. So if you're looking for $100 in profit, that's going to be on a tick by tick basis, right? That'll be kind of like real time there. However, if you're using an ATR, well, that's going to wait for the bar to close because the ATR is an indicator. All right, but ticks, points, those will be calculated by tick basis in real time. So there you go. I think that pretty much completes it. That's the rule of thumb there on how trading rules are evaluated, right? I'm gonna just take a quick look at the repeat here. Let's see. You'll see that some of the repeats, again, the repeats you can look at you can repeat on a tick by tick basis. Right, there's ticks or bars. So so the repeat could be used to in a roundabout way, the repeat could be used to determine if the trailing rule evaluates on a tick-by-tick basis or at the bar close. So let's say, for example, so the way I got this set up here, right? We're looking for 100 ticks in profit. All right, yeah, we're looking for 100 ticks in profit. So the first time that we get 100 ticks in profit, that's gonna trigger on a tick-by-tick basis. But then if we look at our repeat, if we have our repeat set to bars, then the second time that, the repeats afterwards, so the second, third, fourth, and fifth time, those are going to evaluate on a bar by bar, right? So the repeat sometimes can change how things are evaluated, right? So the very first trigger would be on a tick by tick, but then the second and third times that this triggers, well, that's gonna use the repeat rules here. That's gonna use the repeat section. So since our repeat is set to bars, then this trigger after 100 ticks in profit, it would only trigger when the bar closes if we're using bars. Now, of course, if we decide to go with ticks in profit, or points in profit, if we're using, ticks or points, then again, if we're setting one tick, then again, this rule is going to evaluate on a tick by tick because we have it set to repeat every one tick. So for every one tick in direction, right, that's going to try to evaluate this rule here. So, all right. Anyway, yeah, we'll get to the repeat here a little further down the road. So, let's see. And just a moment here. Jeff's got to follow up here. So, okay, yeah, I'll repeat. I'll explain the repeats here shortly here once we get to that section. So, all right, so let's cover the actions next, and then we'll move on to the repeat here. So for the actions, the vast majority of the time, the action is going to be used to move your order. So for this example, the action is going to move our stop loss around. So the actions are, right, you could freeze an order. So something could happen, and you could freeze your stop loss so it never moves again, right? So once a stop loss has been frozen, it's frozen forever. There's no way to unfreeze a stop loss, or there's no way to unfreeze an order. So once an order has been frozen, it's just going to be locked in place until the trade's over. Right. And then there's move order to, right? That's the vast majority of people are just going to use the move order to. And we'll cover that in a little more detail here in just a moment. And so the last option here is cancel order, right? So if for some reason we wanted to, we could actually cancel our stop loss and get rid of the stop loss, right? Cancel it, it's gone. No more stop loss protection, right? You would still have a profit target in place, but you would no longer have a stop loss to protect you anymore. So you could cancel your stop loss. You could also cancel your profit target, right? We could go into the profit targets, right? So I'm setting up a trailing rule for a profit target. and I could cancel my profit target for some reason. So if I cancel my profit target, then hopefully you still have a stop loss, and you'd just be using a trailing stop loss to take you out after if you decide to cancel your profit target there, right? So, all right, yeah. So freeze order and cancel order. I've never. I don't think those get used all that much, but those are some actions that traders do take. So those are available, but 99% of the time, your trailing rule is just gonna want to move your order somewhere, right? So you're gonna move your order to somewhere. So now we have to decide. Now we have to tell BlackBird, okay, where do we move our order to? And again, so for a stop loss, typically you would move your stop loss, based on the last price, right? So if you're using a stop loss that's moving in real time, then you could use the last price and then subtract 10 ticks from it, right? So this would create a 10 tick trailing stop loss. It's just a simple 10 tick trailing stop loss. You could trail your stop loss using other price data. You could use, so say like we're in a long trade, you could use the low of the bar. You could say, whatever the low of the last bar was, minus 10 ticks, right? Or you could say, look at the low of the last 3 bars and use the lowest low. So the minimum value would be the lowest low of the last 3 bars, right? And then you could do that and then, I don't know, minus a tick. Or you could just set it at the lowest low of the last 3 bars, right? So no tick offset, just the lowest low of the last 3 bars there, right? Or you could use the highest low value. So whichever low price of the last 3 bars has the highest low of the last 3 bars, that's what the max value would be. So, right. Basically, these here are like the same as Bloodhound. So I think most of you guys all have Bloodhound. So this this process look back by, these settings are all the same as what's being used in Bloodhound here. If you wanted to, you could average. So you could take the average of the last 3 bars for the low. You could take the low of the last 3 bars, average them out, and use that price to set your stop loss. All right, so we did something like that. So we're using the high-low, right? So we're taking the low of the last 3 bars and averaging them out. And if you're in a short trade, right, you can see for a short trade, it would take the high of the bar, the high of the last 3 bars, and then average them out. So, or you could just look at a single bar, right? So single value would be basically the same as a single bar. So you could just say, set my stop loss to the low of 3 bars back, 3 bars ago. And that's what a single value would be. So, right. So we've got all of these different prices to choose from, right? Or if you didn't want to use price, you could use an indicator value, right? So let's say you wanted, say you wanted your stop loss to follow the SMA 14. Right, you could set up a moving average, and you could have your stop loss follow the moving average if you wanted to, or you could use a little more sophisticated indicator. So a very popular one is the ANA Supertrend. Let's see. There we go. There's the ANA Supertrend. Right, so we could just follow the stop dot for the ANA Supertrend, and there you go. So if we did that, then our stop loss would match the ANA Supertrend plot, right? Yeah. So if you have some kind of custom indicator that's plotting your stop loss prices, right, then that's what indicator value is for. You can use an indicator to control where your stop losses go. All right, so that's indicator value is pretty straightforward. Two other options here is you could use swing point prices. Swing points. Let's put that indicator on here. So yeah, the swing points is actually using an indicator here. It would be using just a second here. All right, let me pull this up. There we go. So the SI swings highs lows indicator. All right, I think most of you guys are familiar with this indicator. So you can see the swing points here. And let's open this up a little bit. There we go. Right, so you can see the indicators plotting the swing points there. And so let's, wrong button. Let's get this open here. So, all right, so we're working on the actions here, swing patterns. So you can move your stop loss, even your profit target, of course. Now, these trailing rules, I'm using a stop loss as my example because most people are just going to be moving their stop losses around. But keep in mind that these trailing rules also apply to moving your profit targets around, right? So you could move your profit target to one of these swing points as well. All right, so just keep that in mind. Whatever you can do for a stop loss, you can also do for your profit targets, right? You have all this flexibility to move your profit targets around as well. Although moving your profit targets, that's a fairly uncommon practice. So, so there's not a whole lot of examples that I can come up with for moving profit targets around. So that's why I'll just focus on the stop losses here. So again, okay, so the swing point prices. Right, so you'll notice that the number of swings, swing strength, right, these are all parameters within the SI swings highs low indicator, right? And so let's see, so for a long trade, yeah, so if I'm going to use the swing points for my stop loss, yeah, then I'm going to need to make a change. So for a long trade, I'm actually going to want to use the bottom, one of the bottom swing points, and I'll want to use one of the widest swing points. So what you see on the chart, right, the blue and the magenta, those are using the widest, the widest plots there. So the way this is set up now, with a long trade, my stop loss would be moved to the bottom, to the magenta line down here, right, the bottom swing point. If I wanted to, I could set a tick offset, so I could set it one tick below the swing point. Let's see. Yeah, let me kind of, I guess, go into further detail here. So let's see if I have a screen capture. I do. Nice. All right, so I've got a screenshot of that to use. So there we go. Snagit's a pretty handy screen capturing program. All right, so there's a screen capture of that menu. And what I wanted to do is pull up the indicator so we can compare here. So hold on a sec here. Let me pull this chart out of the way. All right. All right. So the number of swings and the swing strength, you know, that's pretty straightforward, right? It just matches the indicator parameters right there. And then the second section here is right this area right in there. So this part right here, this applies to the plots. So if you take a look at the plots area here, right, we have tightest tops, tightest bottoms, widest bottoms, and widest tops. So you'll notice here we have tops and bottoms, and we have widest or tightest. So that's how you pick and choose between which plot you actually want your stop loss to follow. So you can see here that I only have the widest plots showing on my chart, right? The tightest plots, I actually have those set to invisible. Yeah, those are set to transparent. So we don't see these two plots on my chart, but the widest plots, we can see those on my chart, right? That's what those hash lines are, right? And you can see here in my settings, I'm using the widest plot there and the widest plot here for short. So for a long trade, I'm using the widest. For a short trade, I'm using the widest, right? And then I'm just using the bottom or the top. So I'm using these two plots here. And so let's pull back in here. All right, so there's kind of a summary of using the swing points to move your stop loss to. All right, move your stop loss around. Probably something a little more practical would be, you know, if you want to keep your stop losses kind of tight, then you would want to use the tightest swing plots, right? You could have your stop loss match the tightest swing plots. So the tightest plots will actually draw on the intermediate swing point. So that would be like a higher low or a lower high. All right, the tightest plots are gonna plot out the higher lows or the lower highs. right? So this will keep your stop losses a little tighter. All right, let's see, linear regression channel. Well, again, you could set your stop loss to match the upper channel, the midpoint of the channel, or the lower channel. So let me get a regression channel indicator on here so we can have a practical visual on the chart. Okay, there we go. So we can see, let me make those lines a little thicker. And then we just keep an eye on, so the settings for my regression channel are 20 period and a width of 4. So I'll just make sure that that matches up in BlackBird. All right, so getting back into the linear regression channel. Let's see. Yeah, so BlackBird defaults to a 40 period channel, whereas the anti-regression channel uses a 20 period. So I'll just match that up with the 4. So keep in mind, BlackBird uses NinjaTrader's regression channel, when it calculates. So you don't need the anti-regression channel here to use this. I just have the anti-regression channel on my chart just because it looks a little prettier than NinjaTrader's does. But in any case, the point is, right, if you want to use a regression channel to move your stop loss around, then that's there for you. Of course, so for a long trade, you'll probably want to use the bottom channel to move your stop loss. Right, you probably want to use the lower channel there. And for a short trade, you'd probably want to use the upper channel. So there you go, set to the upper channel. And of course, if you wanted to, you could set, a tick offset. You put a couple of tick offsets on there as well. Yeah. All right, so that covers the 4 different options here to move your stop loss to, or to move your order to, right? 4 different ways. Basically, you've got price, or you have indicators, right? You can move your order to a price, to a price bar. Price being basically a price bar, or a bar price, and then the other 3 settings here are basically, those are indicator settings, right? So, let me cover the offset section down here. Just a sec, let me set an indicator back up here. All right, so I'm going to use the SMA, and again, I'm going to use the ATR here in my next example. All right, so you'll notice that a lot of these menus, so the select mode menu, right? The select mode where you can select indicator values or price or something like that, right? You'll notice it has this offset section here. So you could simply, offset a number of ticks. So I could set my stop loss to say 4 ticks below the SMA 14, right? That's 4 ticks below. I could also, though, use an indicator to control my offset. So the only indicator that I have that actually works for this is the ATR. Because you'll notice, you see how the ATR, right now the ATR, it's at 0.07, right? 0.07, well, 0.077 actually. So that would round off to 0.08. So you'll notice 0.08, well, that's going to be 8 ticks, right? That's going to be 8 ticks. So this 0.07 from the ATR actually refers to price, right? It's actually referring to a price evaluation. So I could set my offset to use the ATR. There we go. So let's set up the ATR, period of 14. And so if I decide to use the ATR, and I have a long factor of -1, so what that's going to do, so if we look at this as a whole, right, we're taking the SMA 14, so we're using that as kind of our anchor point, SMA 14, and then we're modifying the price of the SMA 14 with an offset. So, and we're using an ATR as an offset. So we take the price of the SMA 14 and then subtract the ATR. Right? Our long factor is set to -1, so that's going to subtract the ATR. So our ATR is at 0.07. Well, if we round this off, it'd be 0.08. So let's say our ATR is at 0.08. So we take our SMA, right? So our SMA is at 53.65, and then we would subtract 0.07. So now, now it's 0.07 rounded off. So that's what this offset would do. This offset is you can take the value of an indicator and subtract it from the main indicator as an offset, right? So we're taking the SMA 14 and then setting an offset of the ATR. So, of course, you can modify this long factor if you want. You could go like 1.5, something like that. So if we did 1.5, an offset of 1.5, then we'd need to bust out our calculator, and you could take 0.072 and multiply it by 1.5. So we would get an offset value of 11 ticks. So there we go. So open this all back up. There we go. So if we took the ATR and we did a long factor of 1.5, then that equates to a 11 tick offset. Right. So again, what we're doing is we're taking the value of the ATR and we're multiplying it by 1.5. So, if I wanted to, I could do -2 long factor. So a -2 factor on the ATR would be, see, 0.07 times 2 at 0.14. So we take the value of the SMA 14 and subtract 0.14 ticks. So that would set our stop loss down around here, around 56. 53, 56. That's where our stop loss would be evaluated at, right? So there you go. So again, the offsets here, allow you to take kind of like your indicator value, and just add an offset. So. All right. Yeah. So I think that covers the offset. I don't see any questions on this. So, all right, let's step over to the last section here, the repeat section. All right, so let me make some changes here. All right, so if there's no delay, right, there's no delay and there's no trigger, then the action is going to fire off immediately, right? There's nothing in front of the action here. So the action is just going to start triggering immediately. And so if you have an action firing off, well, you'll need the ability to control how often or how many times does this trailing rule, how many times does it trigger? How many times does it repeat? Or how many times does it get executed, right? Sometimes you may only want a rule to trigger only once, right? So you don't want this trailing rule to ever repeat or trigger again. You don't want it to ever execute again, right? So so by default, the repeat is set to none. So that means that this trailing rule could only execute one time, right? So it's never going to repeat. The repeat is set to none. So this trailing rule will never repeat. It's only going to execute one time, and that's it. So if we go in here, right, we have a couple of options here. So the first one is, we could repeat X number of times. So let's say we only want this trailing rule to repeat only 6 times. Right, that's repeat 6 times. So it actually can execute 7 times. Right, 7 times. So you get the first trigger, or you get the first execution of the rule, and then we can repeat it 6 more times after that. Right, and then you can specify, well, how often do we allow this rule to repeat? You could allow it to repeat on a tick-by-tick basis, or you could say, you know what, this rule is only allowed to repeat once per bar, right? Once per bar. Or if need be, you could say this rule is only allowed to repeat, every 3 minutes, or whatever you want, right? Every 5 minutes, this rule is allowed to repeat. So, right. So let's go back to ticks here. So if we do ticks, most commonly people are going to use ticks in direction. So you could say, you know what, this rule is allowed to repeat every 5 ticks in direction. So every time price moves 5 ticks, so 5 ticks from the last time the rule repeated. There you go. So Um, right. You could set the repeat up so that it happens when price goes against you. Right, so you could say repeat every 5 ticks, price moves against you if you wanted to. So, all right, let's see. The next one is repeat indefinitely. Right, so this means this trailing rule can repeat forever. As long as the trade's alive, this rule can keep repeating and executing, right? No limitation there. And then we have repeat until. So you see here we have like some trigger. You'll see we can repeat until, and you'll notice that this menu here looks exactly like the trigger rules, right? So basically, you could set up a trailing rule so that it repeats until some kind of trigger event occurs, right? So simple one is we could say, okay, let's repeat this, until we get $200 or $225 in profit, right? So once we get to $225 in profit, then we stop repeating this trailing rule. So in this example, we would, once we reach $125 in profit, then we would stop trailing the stop loss. So the stop loss would stop trailing after $125 in profit. So there we go. Repeat until $225 in profit. Let's see. What we did another one here. Another one. Timer bars. So we could say you can repeat this rule for 15 minutes. Right? So this trailing rule can keep on trailing for a total of 15 minutes. And that's it. Once the 15 minutes is over, then then this trailing rule would no longer execute anymore. It would no longer repeat anymore. So and all right, yeah, so those are the 3 repeat options, right? You could set a fixed number of times. You can repeat, forever, indefinitely, or you could set a limit, repeat until, which sets some kind of a trigger, some kind of a triggering event here. All right. Okay, now here's Jeff's question is, what is this only repeat when re-triggered here? So probably something more practical would be, let's say we have a rule that says repeat indefinitely, and we're repeating, I don't know, let's say we're repeating every bar here. So okay, so to understand how this repeat works, we kind of have to take a step back here and take a look at the sequence of stuff. All right, so let's kind of go back to the delays. So let's say we're going to wait for 7 ticks in profit, right? So once this delay is over, it's over and it's done with. And the delay, basically, the delay is no longer, the delay becomes ignored, right? So once you get 7 ticks in profit, the delay is ignored from that point on, and everything after it gets evaluated. All right, so basically we're free to now look at the trigger or just do the actions. Now, let me turn the delay off. So let's just say we're only using a trigger. All right, so let's say we're looking for $100 in profit. All right, once that $100 in profit has been achieved, once it's been triggered, once a trigger event has occurred, it's always in a true state, right? So once the trigger has triggered, it's always triggered. So basically, once we get $100 in profit, the action will always execute. Okay. So again, let's go to the repeat here. So once the delay is done, it's done. It never gets evaluated again. Once the trigger event has triggered, it is also done, and it stays in a true state. So basically the delay says, okay, my delay is met, so I don't need to be looked at anymore. And once the trigger has been met, once that condition has been met, the trigger stays true forever as well. So it says, this trigger, condition has triggered, and it stays in a true state. And so once the trigger has occurred, the action will always be executed. Will always be executed based on your repeat. Right. So in other words, once $100 in profit has been met, this action will always execute. This action will always move your stop loss. Basically once per bar. So this repeat is set to once per bar. So once the bar, so on every new bar, this action is always going to execute. So we're always going to trail our stop loss. Unless you check the repeat only when retriggered. So basically this repeat now the repeat can only happen when the trigger gets triggered, when the trigger condition happens. Right? So basically this only repeat when retriggered. What that does is it forces the trigger event to happen. It has to happen again before the action can take place, before the action can execute. So probably something that's a little more practical would be, let's say we're using a bloodhound signal, right? So we've got a bloodhound signal, and as soon as we get the first bloodhound signal, then this trailing rule can execute can execute all the time, depending on how our reset is. So if I have my repeat to repeat indefinitely once per bar, all right, as soon as we get that bloodhound signal, then the stop loss will begin to trail on every new bar indefinitely. It'll repeat indefinitely for every new bar, unless I trigger this. If I select this only repeat when retriggered, then the bloodhound signal, it has to trigger again. So with the repeat, if we're using repeat indefinitely, we have only repeat when re-triggered, then what that means is our bloodhound, we have to get a bloodhound signal every time for the action to move the stop loss. So in other words, the stop loss can only move when we get a bloodhound signal coming in. Right? So with this checked, a bloodhound signal has to come in before the stop loss can move again. Right? So before we can repeat moving the stop loss, we have to get another bloodhound signal. So, right, in other words, the trigger has to trigger again in order for the repeat to happen. So, so if we're looking for an indicator value, right, so if we're looking for, if we need the ATR, if we're looking for the ATR to go above 0.1, well, the stop loss will only be able to move when the ATR is above 0.1. Right? In other words, our trigger has to re-trigger. Right? So this trigger has to re-trigger. And so the trigger is only going to re-trigger when the ATR is above 0.1 for this example here. Right? Again, if we're using the profit and loss, let's say, so the profit, our profit has to stay above $200 in order for this trailing rule to execute or to repeat. Right? So if the profit, for this trade, actually not trade, if the profit for this order set stays below, if it's below $200, then this trailing rule is not going to repeat. Right? So the profit for this order set has to be above $200 so that it re-triggers. Right? We're looking for the trigger to re-trigger, which means the profit has to be above $200 in order to re-trigger. And then we can repeat the action. Basically, we can move the stop loss. The stop loss can be moved again, or the action can happen. The action will occur. All right, so I think that pretty much concludes it, guys. So if you guys have any, follow-up questions on any of this, now would be the time. Go ahead and speak up. All right, and so Jeff, I hope I answered I hope you understood the answer I gave you there for this only repeat when re-triggered. So, let's see. Again, guys, or not again, but I just say, don't be afraid to take a look at the documentation, on this stuff. So if you're looking at anything within the order settings, right, if we go to the menu here, we can see right here is order settings. Click on that. And, what we're working in the OCO order sets, right? We're working in the OCO order sets here. So we can scroll down to the OCO order sets like that. There. we can just keep scrolling down. So here's the trailing actions tab. Right, so if we look, right, trailing actions, there you go, trailing actions tab. So and then we can scroll down to, right, basically here's the trigger on column. So there's a synopsis of all the different trigger-ons, or all the different triggering events. Right. And if we go down to repeat, there you go. We're down here at the repeat section. You can see only repeat when retriggered. And so there's an explanation of what that does right there. A little short summary. So if you ever need to kind of, jog your memory, remind yourself of what these all are, all the documentation is right there. All right, so let me see. I think looks like a yeah. All right, yeah. Looks like I got a couple of questions here. Let's see. Oh no, okay, no questions. It's just a comment here. Yeah. Jeff commented that basically it's like these trailing rules is kind of like an ATM on steroids, and definitely that's kind of how we explain it. Yep, it's like a Ninja ATM, but definitely on steroids. Or it actually definitely it goes way beyond Ninja Trader's ATM. But yeah, that's kind of one good way of putting it. And see, the other question is, do I have a topic for tomorrow? No, I don't, Jeff. So if you have any questions for tomorrow's Bloodhound workshop, please go ahead and email that in, and we'll get your question up first. All right. Okay, so it doesn't look like I have any further questions on this. So I'll give you guys a moment to pipe in any questions you might have. In the meantime, let's see. I'll see if there's anything else I can think of. Yeah, let's see. No, I don't think I missed anything here. So, yeah. So, all right. Well, yeah, I think that does it, guys. So, yeah, I guess with that, I'll wrap it up. So, we're at the 2.5 hour mark almost. So, yeah, I guess this would be a good time to wrap this up. So, yeah, again, guys, I think all of you guys have Bloodhound in here. So, if you have any questions for tomorrow's Bloodhound workshop, please get those emailed in. Yeah, if you could email those in today, I'd appreciate it. And all right, I hope to see you guys tomorrow then.